Hello, good afternoon, good evening, sorry, good evening. Can everyone hear me? Before I start, just want to do a quick poll to make sure everybody can hear me. Let me know if all of you can hear me. Okay, yep, yep, okay. Most of the people seems like, yeah, okay. Can see my slides, right? Hang on. Can you guys see my slides? Hang on. Okay, okay. So everybody can see my slides. Okay. Okay, in that case, then we can start our events tonight. So just a very good evening to all of you. Okay, hang on. Oh, sorry, I stopped the poll first. Okay, okay. So yeah, thank you everyone for joining us tonight. So a very good evening to all of you. My name is William, and I am from Phillip Capital. I'm a senior and also a dealing executive at Phillip Capital. So before we start, just a quick disclaimer. Whatever that we share tonight is only for knowledge sharing purpose, and it doesn't contribute any buy or sell call. Okay, so just a quick run through about our company. So our company, Phillip Capital Sdn Bhd, we were incorporated on October 1995, and we are a wholly owned subsidiaries of Phillip Capital Holdings, which is our mother company. Okay. Previously, you guys have known us as Phillip Futures. Okay, sorry. So previously, you guys have known us as Phillip Futures, but subsequently we onboard our stockbroking business and we rename ourselves to Phillip Capital. Okay, so Phillip Capital, we are a trading and also a trading participants of Bursa Malaysia, and also a participant organization of Bursa Malaysia Securities Bhd. So we offer both futures and stocks right now. Okay, we are a CMSL license holder. For our offices, nowadays we have of 11 offices, 11 investor centers across Malaysia. Okay, in Alor Setar, Penang, Damansara, Melaka, Johor Bahru, Kluang, Sibu, Kuching, Kota Kinabalu. Okay, if you are at this area, you can find us or drop by our office. So if you are our clients here, just want to say a very big thank you to you. Okay, without you, we won't be able to achieve this. So we have got multiple awards over the years. Okay, so in 2021, one of the main award will be the best overall derivative, the best institutional derivative, and also the best retail derivative trading participants. Okay, so our global coverage, we have offices in over different 14 countries, as you can see here. Okay, so with that, we don't only offer products in Malaysia. We also offer products all over the exchange countries in different exchange like CME, the US, in Europe, the Hong Kong exchange, etc., etc. Okay, just a quick one to introduce what we offer. So we offer futures. Okay, so what you have been familiar is we have been offering futures in the past 20 years. And a few years ago, we offer contract for difference, which allows our clients to trade stocks in US, in Bursa at a very, very attractive leverage. Tonight, we will focus on these particular products. Okay, our seminar is mainly on these products. And lastly, we offer stockbroking business. So basically, it allows our clients to trade Bursa, Singapore, Hong Kong, US, and Australia shares. Okay, so why trade with our company? So first of all, we are an award-winning broker. We offer 24-hour support. So if you have any questions, you can always call in, even during the midnight. Okay, and we offer advisory services and letters, market news exclusively for our clients. And like I said, we offer products from multiple exchange. So if you want to open an account to trade all these, you can do it online as well. Okay, for futures. So at Phillip Capital, we actually have this one-to-one coaching session exclusive. If you are new to the market, you want to know more about it, you can book a session with us. We will be free to sit down one-to-one with you. Okay, and also we have these free seminars and webinars all the time, like tonight, that you can join and also open an account for free. Okay, just need to sign in to activate it. Okay, so for our upcoming webinars or seminars, you can scan this QR code. Okay, you can scan it, and also to go to our, you can directly go to our website to register. So for our trading platform, on futures trading, we offer Phillip Nova. So Phillip Nova, basically, you can get any indicators inside. We have over 90 different indicators. You can buy or sell directly from the chart. Okay, and also you can trade both local and foreign products under one single exchange. Okay. Now, for CFD, we are using CFD Trader. So basically in CFD Trader, you get to have live chart, you get to set your price alert, you get to set your stop loss order, and this is how our CFD traders look like. Okay, sorry. Okay, so next I'll move on to the promotions. Start off with the share CFD. Okay, so at this moment, if you want to trade CFD, we have a promotion until 31st of October. Basically, you can trade it at 0.3% on Bursa or US stocks. Okay, or if you want to trade the indexes, our brokerage on US indexes is only USD2 per contract. If you want to know more about it, you can contact us to let you know more about how our CFD mechanism works. Okay, now I'll pass the section to our speaker tonight, which is Mr. Bong Jeen Hao. Okay, he will share with us on how to trade stocks, whether trend following is still the method in this uncertain market. Okay, so yeah, I will pass the section to Bong. Hang on. Okay.
All right.
Okay.
Okay. So can you see my full screen now?
Yes, I can.
All right, full screen. Okay, thank you very much. So just wondering, can participant actually type things in the chat?
Yes, they can. They can.
All right. Okay. Thank you. Okay. So if you guys can hear my voice clearly, can you please type yes in the chat box? Okay, type yes in the chat box. Just let me see if everything is working well. Because I doesn't seem to see any chat coming out from my side right over here. Okay, doesn't seem like there is anything. All right, but never mind. Okay.
I can hear you.
Yeah, okay, I assume, okay, the rest can actually hear my voice very clearly and see my slide. All right, so what is up, everyone? Thank you for your time. First of all, I'd like to thank Phillip Capital for having me here today to share with you a little bit about trend following stocks, especially in such an uncertain market situation. Be it you are trading US market, you're trading Bursa market, everything is very challenging right now. Okay, everything is very challenging right now. So again, a lot of people try to, doubt that certain method, whether it works or not, and things like that. And tonight I'm going to uncover whether or not trend following strategies can still work in such a market situation. All right, so hi everyone, my name is Jeen Hao, and before I continue any further, as usual, we have to go through the disclaimer, which William has already gone through just now. And yeah, basically everything I said tonight is just for educational purposes only. So this is basically myself. I'm a position trader in the capital market. I focus on stocks and futures. So I would say primarily stocks and their derivatives, including CFDs. So I'm a founder and chief master trainer of Street Finance, and I have a signature program called Street Trader Intensive. So basically the way I trade without monitoring and speculating. So I've also been featured in Britishpedia, Biographic Encyclopedia, Successful People in Malaysia of the 3rd edition. And I'm also went to like media like City Plus, FN, Borneo Post, and I spoke for Bursa Malaysia and other investment banks, just like these sessions right over here. And I also went to a lot of universities and colleges to do a lot of sharings. Okay, so if you want to know more about me, you want to have some inputs on other things, okay, you can, sorry, I'm still coughing. Okay, so you can go to my social media, especially Facebook, because every Sunday I will Sunday 8 p.m. I will do a live sessions to sort of like a market update overview and things along those lines. All right, so this is the agenda for tonight. Okay, first, does trend following still work in an uncertain market? And the second, we're going to talk about the current market analysis, US and Bursa, and it's going to be very uncertain. Okay, maybe, okay, whatever I said later, okay, will not be valid anymore, okay, after today, because you know a lot of things are happening, and later our time 2 a.m. there's going to be a FOMC meeting. So again, a lot of things are going to be happening, okay, and I will probably do another some commentaries along the way, because the slide was prepared a couple of days ago and things have been changing a little bit. Okay, so third, we're going to talk about how to select stocks to trade, and fourth, how to manage your trading portfolio with proper risk management. So CFD is a leverage product, so we need to know how to, you know, manage our risk, okay, manage our trades with proper risk management. Okay, now I just want to ask you guys, okay, I cannot see any responses for some reason, but I still want to ask you guys one question. Okay, two questions. Okay, do you ever encounter such situation? The first situation, you look at a stock, the stock price has been dropping and it looks cheap. You buy the stock, however, the stock just becomes cheaper and cheaper. Okay, I don't know whether you encountered this situation or not. Maybe you buy into some stocks that are trending down, like, you know, stocks that were hot in 2020, the glove sectors. That's just an example, okay, or some of the energy stocks in Malaysia. The second scenario, you look at a stock, the stock price has been going up, and you feel like it is very expensive, and you feel like you are late for the party. You end up not buying it. However, the stock price just moves higher and higher, and you always feel that last week or last month was the best time to buy. Now, in current Malaysia market, there are a couple of stocks that are going up very aggressively during this couple of months. Okay, so do you ever have that kind of, you know, encounter such situations? Now, if you have encountered those situations, then this will explain why trend works. Okay, so follow the trend, you actually follow the smart money. So the core belief of trend following is the trend is more likely to continue rather than reverse. Of course, I'm not saying that they will never reverse, but it's more likely to continue rather than reverse. So an uptrend has a higher probability to go up, and a downtrend has a higher probability to go down. So trend traders or trend followers will look into going long in an uptrend and or, okay, looking into going short in a downtrend. Now, just to share with you personally, as far as stocks is concerned, I don't go short. Okay, but when it comes to index, yes. Okay, the reason is because stocks tend to rebound faster than you think, although they are not like rebound into an uptrend. But if you have shorted stocks before, you will know that one technical rebound can wipe out your gain very quickly. Okay, so the experience is kind of different. But when it comes to index, the answer is yes. Okay, so if you want to know how to short index, you can consult Phillip Capital's, you know, representatives. All right, so they are more than willing to share with you how you can do that. Okay, especially given that the US market, okay, is in a downtrend right now. So when the opportunity comes, you might want to execute some short trades, okay, because the trend is down. Okay, the trend is down. That's right. Now, understand that yes, there are going to be news and things like that. Okay, news are just part of the process. Okay, just part of the process. When the market is in a downtrend, it will have a lot of news will kind of like become excuses for the market to keep going down. Okay, it's just like last time, you know, the market suddenly gap down and a lot of those scenarios. Okay, so trend is down. We talk about probability. of the market going up and down. So it doesn't mean that the market is trending down right now. The S&P 500, the Dow, the Nasdaq are going down. The market is totally trash and has no opportunity. It depends on how you look at the market. So does trend following still work in an uncertain market? And I'll talk about the stocks right now. Okay, so for index, you can analyze the index. If you want to go long or go short, ask Phillip Capital's representative and they will share with you how you can perform those transactions. All right, so does trend following still work in an uncertain market? Now, just to show you a few stocks. This is ExxonMobil. You can see that since the beginning of the year, these stocks has been trending up. Okay, this stock has been trending up. So you can see that the stock trending up and up and up and up. And here it may present a risk that the stock might go down. Then after that, it could go up again, and right now enters into an unknown. But you can see that trend, when it is still in a very strong uptrend, okay, usually the probability for it to go up, it can be higher than going down. All right, I would say the nicest would be the beginning here, okay, beginning of this year until June. After that, the market did go up. Personally, I do trade. I traded ExxonMobil as well, made me money, but recently it go into like sort of like a mini correction, and we don't know what is next. Okay, but anyway, this is just to demonstrate to you, market is weak, S&P is down, Dow is down, but ExxonMobil is up. Now, this is another stock called ConocoPhillips. It is also in the energy sector. You can see that. Okay, the market just go up and up and up. Mini fall, pull back here and then go up, pull back here, go up again, and then we have a correction that eventually rebound again, and we don't know what's next. Okay, maybe another correction, and then depends. Okay, how the market will move, but this remains a very good uptrend stocks. Now, a lot of energy stocks in the US are actually still in an uptrend. If you look at like Chevron, okay, they are still in an uptrend. Okay, now why is this important? Remember, as a trader, okay, as a position trader, okay, if you want to make money in the stock market, okay, given any situation, okay, whether the market was in a bull run or right now when the market is bearish, you need to find stocks that perform better than the market. I repeat, you need to find stocks that are performing better than the market, meaning that the stocks outperform the market. Now, these stocks obviously outperform the market. Okay, why? You can see you can see that the S&P 500 right now is below the EMA or MA 200, which is the long-term average. But these stocks are obviously outperforming that, and they are obviously in a long-term uptrend, trading above 200 days moving average. All right, so next, ENPH, Enphase Energy. Now, this one, they deal with green energy. Okay, they deal with green energy. You can see that this stock is in a really great uptrend. So how you enter is another thing. Okay, again, remember the disclaimer. I'm just showing you what are the stocks that are in an uptrend. So if there is any trend continuation pattern, okay, then we will look into entering those stocks. Another one is First Solar. So First Solar, similar industry with Enphase Energy, and this one deal with solar, obviously, and it is in an uptrend. So this one is Malaysia, okay, Alliance Bank, one of the uptrend stocks in Malaysia. Banking sectors in Malaysia, generally, you can find some of the uptrend stocks. Okay, this one is M-Bank, and this one is another, okay, uptrend stocks in Malaysia, Hanlon. Okay, and Perak Transit, okay, P-Trans is also in an uptrend. Okay, this one is a really nice uptrend. Okay, so, and then Fiamma Holdings, all right, so they are in an uptrend. So you can see that these type of stocks, okay, maybe during beginning of this year, you did not look at this stock, which is normal. Neither me. Okay, I never look at this stock until the stock shoot up, okay, in March. Then I start realizing that there is such a stock. And then when it go up and up and up and up, of course we don't chase. Okay, of course we don't chase. Okay, and then what we do is we put it in our watch list. Then after mid-April, it go down, down, down until July, it started to go up again. So when it go up again, you can see that it becomes very strong. It shoot up like this, consolidate, okay, and it go up again. So when the strength recovers, you see a trend continuation pattern, okay, or any sign of trend continuation, then that would be the time whereby you might want to observe and relook into the stock. All right. So next, let's talk about the current, okay, US and Bursa. Now, this is the S&P 500 index. I just want to show you the latest, okay, S&P 500 index, the current situation that we are in right now, okay? And here we go. Okay. All right. So you can see that the market, okay, when okay, some people might ask, okay, why the market, okay, go up here and then go down again? It's very simple. Okay, you draw a trend line, they will understand what was happening. Okay, now let's talk about this. It hit the resistance, come down, go up again. Seems like trying to go up, but boom, the market went down. And then the market tried to rally again, and then boom, the market goes down. Then for the past 3 days, you can see that the market has been hanging there. Okay, so the first day, on the 16th September, okay, on the 16th September, what we see is a bullish pin bar. So if you are familiar with this pattern, okay, usually it is a possible, okay, a reversal pattern. You can see that this is also a pin bar, and then the market rally after that. Okay, and you can also see that this is a pin bar. Okay, and the market rally after that. So here is a pin bar. Okay, the next is a bullish engulfing, meaning that this candle, okay, these candles engulf the body of the previous candle completely. All right, engulf the previous candle's body completely. Now, this is said to be one of the most bullish candlestick pattern. Granted, if the next candle, the market or the stock can move above the engulf candles, but it didn't. What it did, in fact, is the market basically disappoint everybody by giving us a lower low, as you can see right over here. This one is actually a lower low, giving us a lower low, but a pin bar again. Okay, but a pin bar again. So we can see that the market is trying to hang tight. Okay, I would say it is struggle to sit on this level somewhere around 3,850. And I shared in my Telegram channel just now, I said that the market is just one announcement away from making a move. And that announcement is probably going to be tonight. Okay, it's probably going to be tonight. Okay, it's actually our morning 2 a.m. later. So if, okay, I don't know, disclaimer, I'm just making a wild guess. Everybody is expecting the Fed to raise the rate by 75 basis points. So this has already been priced into the market. Okay, remember the bad CPI announcement that screwed the entire market. Okay, not to say bad CPI announcement. The CPI is actually, reducing, but it is worse than forecast. So that's why the market freaked out. And right now, everybody is expecting the market to the interest rate to hike by 75 basis points. Now, if the if the interest rate were to be hiked by 75 basis points, then sure, that's within everybody's expectation, and the market might just, behave normally or maybe go up a little bit. Okay. Now, if it comes out to be 100 points, which is possible, I think around 18% probability, then you will see that the market will probably freak out again and go down. Okay. But it is hard to say as well. Maybe Okay, maybe there are going to be fund managers or institution players that would think that, okay, aggressive rate hike is not bad, but for the economy is good because the CPI is very high and worse than forecast for one time already. So again, it is hard to forecast how the market will move, but what I can share with you right now is definitely the market is one announcement away from a movement. But overall, the trend is down. Okay, the trend is down. Whatever indicators you use, EMAs, SMA, or super trend, or Ichimoku, everything would suggest that the market is in a downtrend. So no doubt the market is weak. So we want to find stocks that are outperforming the market if you were to trade stocks. Now, FBM KLCI, again, this is not in a good shape. Okay, this is not in a good shape. But again, we know that the top 30 performance, okay, the top 30 performers in the so-called top performers in the US market, okay, cannot be, the Malaysia market, the top 30 index component means nothing, okay, means nothing, because most of the time we profit from stocks that are outside, okay, the index, right? So this is just to let you know that, okay, FBM KLCI is not the reference that I always refers to. So what am I referring to? Now, first, you can look at sector indexes. Okay, you can look at sector indexes. So based on the sector index, this sector, which is the finance sector, has been one of the most performing sector overall. All right, but again, you need to find the right stocks. Okay, you need to find the right stocks. Now, plantation sector, from sector index, you can know that what stocks are in play. You can see that beginning of February, it shot up, and after that, it, you know, have a huge retracement, then shot up another time, form such sort of like a double top, then boom, go down. So if you see an index like this, don't simply buy into the stock. Okay, but right now, I just want to share with you that Malaysia market, we do not have any sectors that are in the spotlight. Okay, there is no sector that actually outperform the market. The entire market is weak. We only get a couple of stocks that are in rotational play, okay, that you can make money with. Okay, it's not that the market is totally trash. There are still opportunities, but it is tougher to find than usual. All right, so how to select stocks to trade in such an uncertain market or even in normal market situation. First, you focus on sectors or subsectors that are strong or moving in groups. Okay, that are strong or moving in groups. All right, so this is the first thing. Now, what do I mean by that? Okay, so if we look at previously, okay, now of course everything is very uncertain. So previously, if we look at the US, you can see that stocks like ExxonMobil, okay, is going uptrend. Stocks like Chevron is going uptrend. Okay, stocks like ConocoPhillips is going uptrend. So we know that these are stocks within the same sector. Okay, so you have to watch this sector if you want to make money in the market during such a tough time. Okay, it is still very possible, okay, to make money even if the market is weak, but you need to be a little bit patient to wait for the right setup. Now, what can be some other sectors that you might want to watch? Okay, I can share with you one. Okay, this is Enphase Energy. So you can see that recently it has a little bit of a pullback, okay, which is good because this stock has been going up for quite some time. Okay, for quite some time. So if it retrace and go up, maybe you need to consider to tap on the opportunity. Now, this is green energy. You can also look at, like just now what I show you, First Solar, which is solar related. Okay, and what else? Okay, Sunrun. Okay, so this is also trending up. Of course, recently it has a retracement. Okay, and Sun Power. Okay, so you can see that they are also going up, although not as strong as what I've shown you just now. But you try to find stocks that are moving in groups or they have the same theme. All right, they have the same theme. Now, next, you select stocks that are trending up or with pattern that carries high win rate based on your experience. Because I don't know what strategies you're using. Personally, I use trend following. So I would, within trend followings, there are a couple of, setups that I like the most. All right. Then I choose stocks based on setups that I can handle. All right. Now, next is diversify across different performing sectors. Okay, unless there is only one sector that dominates the bullish momentum of the entire market. Okay, or else having a couple of choices, okay, or elements inside your portfolio is always good. Avoid over diversification. Okay, choose the best within the sectors or subsectors that are performing. Don't be like, okay, some people are like, oh, market is not good, I should buy some consumer stocks. But the oil is also going really strong. They want to buy ExxonMobil, whatever. Okay, and you feel like, okay, the whatever sector looks okay, I want to buy a bit, then you buy that also a bit. Okay, like some people, they like to buy like 20, 30 stocks, okay, in their portfolio. Okay, if that's the case, might as well you buy ETF, right? So avoid over diversification. Okay, choose the best within the performing sectors or subsectors that are performing. Now, of course, another thing that you can do is you trade individual stocks that is performing. Okay, meaning that stocks, the entire sector is meh, is not doing well, it is mediocre, but that one stock that is outperforming the entire thing, outperforming the market and outperforming the entire sector. Okay, so that could be the case as well, especially in Malaysia right now, because Malaysia market right now has no theme. Stocks that are trending up, they are all scattering around in terms of sectors. Right now, next thing that I want to share with you is a quick recap on the 4-step TST process. Now, I shared this during the last webinars I had with Phillip, so I'm not going to talk about the nitty-gritty, but just go through with you. First, the first step that I will do is make sure that the stock has a nice trend. Okay. Second, I plot entry. After I have entry, then I set stop loss. No stop loss, no entry. And then last but not least, I either take profit or I trail the stops, meaning that I move my stop loss upward. Okay, if the stock were to go up. Okay, so just to share with you one example. So this is Hanlen, a stock in Malaysia. Okay, so you can see that previously it was strong. Okay, strong, then boom, go down, then go up again, then consolidate. So the first entry was actually this breakout. Then after that, it breakout, retrace back to retest this resistance, then rebound. So this is the first entry. This is the first entry. And your stop loss can be set below the swing low. All right, you can set below the swing low. Okay, so again, this one is a nice rebound. So this is an entry. And this is your stop loss. Now, after you enter the stock go up again, then go up again. So you cannot just leave your stop loss here. What you need to do is you move your stop loss upward, become a trailing stop. You move your stop loss upward, okay, become a trailing stop. So this is what we mean by trailing stop. But of course, if you enter, you don't enter here. Okay, you can also enter here when it has a turnaround point. You enter maybe here, and then you set stop loss down here. So same thing. Okay, same thing. So this is at least my way of trading stocks. Okay, I look for trend continuation pattern. All right. So this is how I implement the TST process into my trading plan. All right. Now, the next part of this webinar, I'm going to share with you how you can manage your risk, manage your trading portfolio with proper risk management. Now, understand that if you're dealing with CFD, you are dealing with leverage. Okay. Let's say if you enter into one stock that has 10 times leverage, you put in 100,000, you buy, you have technically you might have 1 million, okay, of buying power. But if you're to use this account as 1 million, you get into a stock. If the stock has a downward movement of 10%, it means that you're already lost 100,000, which is your capital, and your entire portfolio is wiped out. So being able to manage risk is a huge part of trading leverage products like CFD. So how do you manage your trading portfolio, okay, with proper risk management? So everything has to be calculated. So the technique here is what I call position sizing. So position sizing refers to the size of a position within a portfolio, or the amount that a trader is going to trade given the risk per trade and portfolio size. Now, in layman term, it means how much to buy. Because when you're dealing with, now, even if you're not dealing with leverage, you are trading a, I don't know, cash upfront account, okay? If you always wonder how much to buy, if this is the question, maybe you have 20,000 in your account, you have 50,000 in your account, you have 100,000 in your account. Every time you look at a stock, okay, this stock not bad, how much should I buy? Whatever lah, 5 lots. This is not the way you should handle your portfolio. Now, if you bring this behavior or attitude into CFD trading, you would mess up. Things can get out of hand very quickly. So you need to find out how much to buy. Very important. So position sizing is an important risk management technique used by portfolio managers and professional traders because it controls the risk exposure for the portfolio. Now, here's the formula. You might want to write it down or, take a picture. Your position size, which is essentially how much you want to buy, equals to the amount of risk divided by amount of maximum loss. Okay, and amount of risk, how do you calculate? Your net liquidation times maximum risk per trade divided by entry minus stop loss. Now, net liquidation refers to the if your stocks, if your portfolio does not have any stocks, your net liquidation is the cash you have. So if you have 100,000, your net liquidation is 100,000. Okay, now your buying power is not your net liquidation. Okay, your buying power is not your net liquidation. If you have 100,000, yes, you can buy up to 300,000 or even 1 million with CFDs, but your net liquidation is 100,000. So you have to calculate based on net liquidation. Now, if you already have stocks in your portfolio, net liquidation refers to if you're to sell off everything today, what is the amount of money you get? That is what I call net liquidation. All right, so times maximum risk per trade. Now, maximum risk per trade set to 1%. If you're dealing with CFDs, I highly recommend you start with 1%. All right, so divide by entry minus stop loss. Okay, now this is how it works. So for example, Mr. A has a portfolio valued at 100,000 based on net liquidation. Now his risk per trade for this portfolio is 1%. Okay, so Mr. A wanted to take a positions on stock AAA. The entry and the predetermined stop loss are as follow. The entry is 5 ringgit and the stop loss is 450, 10% stop loss. Simple, straightforward. So based on position sizing, how many units of stock AAA Mr. A should buy? So the formula is here. Position size times risk per trade divide by entry minus stop loss. So positions portfolio size is 100,000 times 1% risk per trade divide by $5 minus 450. So you get 2,000 units. So Mr. A has to, based on this risk, okay, this stock, the risk that the stock AAA carries, he has to buy 2,000 units. All right, so how does this work? How it works? First, Mr. A will enter 2,000 units of stock AAA at $5, using up 10,000 of his buying power. All right, should stock AAA drops to his predetermined stop loss of 450, he would then sell the 2,000 units of stock AAA and get back 9,000. So the loss would be 1,000 before fee, and his portfolio value would drop by 1%, aka the predetermined risk per trade. Okay, so meaning that if I have 5 positions, okay, I have 5 positions, then I know that my portfolio is at risk of 5%. That's it. That's simple. Okay. In this situation, you know that how much risk you are exposed to. Now, of course, you might think that I have 100,000. Why am I taking a positions with only 10,000? Now, because when your stop loss is less than 10%, meaning that if today the entry is going to be $5 and the stop loss is 4 ringgit 75 cents, for example, this position will be larger. For example, if you were to mix some of the high flying stocks, okay, you realize that you buy a lot less. Okay, so high flying stocks, those highly volatile stocks, they are quite risky. So when you plot a logical stop loss, it's going to be big. So to compensate that, using this formula, you'll buy less of that stock. Now, as opposed to maybe you enter a banking stocks, which is, you know, sometimes you use the previous swing law, is only like 5%, 7%. Okay, then you will automatically buy more of these stocks. Okay, more of these stocks because it is less risky for your portfolio. So that's why you can take up a larger position. Okay, so you will end up using more than 10,000 for that position, for example. Right, so back to this case, if stock AAA go up and Mr. S sells at 650, he would then sell his 2,000 units of stock AAA at 650 and get back 13,000 ringgit, which is a profit of 3,000 before fee. So his portfolio will grow by 3% in portfolio value, or in risk multiple, we say 3 times of what he has risk. Okay, 3 times of what he has risk. Okay, so as the predetermined risk per trade is 1% right now, Mr. A grows his portfolio by 3% as a result of this stock. So his risk reward ratio is 1 to 3 as he made 3R from this trade. This is what we call risk multiple. Now, just to share with you that some stocks, naturally, they carry less or lower, you know, risk in general. Okay, so for example, if you're to trade stocks like, let me think. Okay, for example, again, no buy or sell call. So for example, you look at Hanlon, okay, or maybe look at Texcam. Okay. So for example, if Texcam were to rebound, you want to buy. Okay, so maybe you want to buy at 350. You set a stop loss below the swing low, which is below the pin bar here, then you realize that the stop loss is about 12%. Okay, about 12%. As opposed to, let's say, if you go to stocks like Affin, Mbank, okay, or Airbnb, okay. Now, if let's say I'm going to set a stop loss below the previous swing low, which is this one, and if the stock rebound to maybe 370, you want to buy, okay, you want to start to rebound enough before you buy, you set a stop loss below the swing low, it is only 4 to 5%. So naturally, this is less risky. So when you plug the number into the calculation, you automatically buy more. All right, automatically buy more. So if all your stocks are of this low risk kind of setup, like banking stocks, okay, then you will end up buying like 5. You use up your 100,000 buying power very quickly. So that's why CFD comes in, so that you can buy more than 100,000 of value of, you know, contracts in this case. So however, despite buying more than 100,000, you know that if you're entering the 6 stocks, your 7 stocks, you know that each position is going to expose 1% of your portfolio. Okay, you already know the predetermined risk that your portfolio is exposed to every time you establish a new positions. All right, so I think that would be the end of this webinar. I'll pass the sessions back to William for Q&A.
Thank you very much, Jeen Hao. So now let's move on to the Q&A section. If any of you have questions for Jeen Hao regarding what he has just shared, feel free to type in the question box. Okay. Okay, we see some questions here. Let's have a look.
I cannot see the question.
Hang on. Yeah, you cannot see the questions. I will read it out for you if there is any question. So yeah, feel free to type in the comment box, in the question box. Hang on. Okay, hang on. So let's see if there is any questions. There is a question is for you by Mohammed. Are you a trader?
Yes.
Okay.
I do have investment portfolio as well, but primarily trading. Investment, I buy and put, buy and collect, buy and collect. I think those are easy stuff. Okay. You got money, extra money, you invest, but primarily I trade.
Okay, so I guess he is asking probably, do you do trading for a living, I guess lah?
Yeah, sort of lah. I do have my own business, okay, and I do trade as well.
Okay, and the same question by Mr. Mohammed is how to be like you, and like as in if he wants to be in the investment line, do you have any advice on that?
It depends on what's the situation you are in right now. It is not an easy, smooth selling journey, I would say. Okay, there are going to be tough years or tough months. Like right now, the market is definitely bad. Okay, if I tell you I have 0 losses, I'm lying. Okay, so if what has happened to the market this year were to be translated to my very early journey in the stock market, I believe that it would take a long time for me to recover. So what I would say is it much depends on where you are, what's your current situation is right now, and always start small and know what you want. Okay, if you want to trade for a living, now understand that trend following strategies, trend following strategies requires to hold a position for a long time. So if it depends on that trading income, okay, then you need to know that you need to have a lot of cash reserve, because it is not like I trade these stocks and then within this week I can reap the profits. Okay, so it's like ExxonMobil. I hold for 3 months. Okay, so if in the middle of the holding period, if I don't have money to put food on the table, I have to sell the stocks and I miss out a lot. So sometimes, okay, you have to find a balance between, okay, relying on trading income versus on maybe your current active income that you have. Okay, so I don't know what situation you are in, okay, but so that's why I don't know what situation you're in. So that's why it's very tough for me to share with you how can you get there and things like that. Now, so I've also met people who work hard for their life, okay, and they don't really love the process of trading. So for those people, maybe if they are good in what they're doing business, they are working in whatever MNC, and then they get a good pay, okay, and then what they can do is they just invest along the way, invest for the next 5, 10, 20 years. They have a decent portfolio to live with, okay, to get profits. Okay, even they can just put the money into like good ETFs and then they can live with it. Okay, so it depends on where you are right now, as in your current situation in life, and what you are trying to achieve. All right, so there is no definite answer. Yeah.
Okay, thank you, Jeen Hao. Hope that answer your question, Mr. Mohammed. Next question is by Monica Tan. Okay, so she's asking that she's still not very sure with how you set the percentage that you shared earlier. Like how do you set that 1% or something like that? I think probably what we can do for you is we can share you the slides. Okay, so yeah, I will get your the respective dealer to probably share Jeen Hao's slides lah, so you can have a better look on how to set that percentage tier.
Yeah.
Yeah.
Basically,
Yeah. Maybe how can Yeah, you can explain one more time. Yeah.
So basically the 1% is a predetermined level. Now, what is this 1%? 1% means every time you make a mistake as in a stock go into your opposite direction and then hit your stop loss. So every time one counter hit your stop loss, how much your portfolio loses. This is basically the idea of risk per trade. All right, because every stock has their own respective risk. Some stocks are like $30 and then your stop loss is 27. Some stocks is like, if you trade like Microsoft, it can be like $200 and your stop loss is 170, things like that. So every stock has different price and risk. So how much to buy depends on your position sizing. And this 1%, okay, meaning that regardless what stocks you are dealing with, be it a high risk, low risk, high price, low price, it can be as high price as like $1,000 per share or as low price as $5 per share. But every time you lose money by hitting a stop loss, the predetermined risk level is 1%. All right, so this is basically the idea of risk per trade. And
Okay.
if your trading behavior, your trading pattern, okay, is having a good risk reward ratio, okay, then if your risk reward ratio is 1 to 1.5 in general, so every time you lose money, your portfolio will draw down by 1%. Every time you make money, your portfolio will go up by 1.5%, something like that. I explained this in the previous podcast. William, is there any way that they can listen back to the podcast?
Yes, we will actually upload our podcast up to our YouTube channel, our Phillip Capital YouTube channel. Yeah.
Yeah, that would explain a lot about trading behavior and also why risk per trade is very important, and not risk per trade, the what we call the risk reward ratio, because risk reward ratio, risk per trade is very they work hand in hand. Yeah.
So this is mainly for risk management, like to make sure that you still have the capital in case your trade doesn't turn out positively. Okay, so next question is by Mata. He's asking whether do you use fundamental analysis during trading? Do you look at fundamental?
Okay, to trade, basically no. The answer is no. I can give you a few example. Okay, I can give you a few example. Now, if we look at FCPO, okay, we look at FCPO. Okay, now actually after MCO, okay, during the MCO kind of thing, okay, MCO, okay, May, June, July 2020, FCPO went into an uptrend. Okay, went into an uptrend. So you can see that it went all the way from 2,000 plus to the highest of 7,000 earlier this year. Now, back in 2020, a lot of people asked me, okay, CPO prices is up. Can we look into plantation stocks? Then I said, I try not to relate things this way. Okay, I try not to relate things this way. So, and also, you look at plantations, or I just simply throw out one stock. Let's say Jayatiasa. The movement only started, okay, here. This one, it go up because everybody is going up, okay, because it has crashed. And then the movement only started a short spike here. So during this period of time when the stock is going down, the entire plantation sector is going down, FCPO prices is going up. All right. So, and there are a lot more. If you were to put, fundamental into trading, sometimes things can be very tough. Okay, just like during the early days where Tesla is, there is a loss-making company, but the stock price going up and up and up and up. Are you going to give up this? Okay, and also fundamental has a lot of bias or confirmation bias in certain case. So when I'm trading, I don't insert fundamental into it. Okay, I just purely technical, because for technical analysis, not only trend follower, but technical analysis in general, we believe that every known facts be it good or bad, has already been factored into the price. It's already been priced in. So we just focus on price actions, right? So I don't care about fundamental when I trade stocks.
Okay, thank you for sharing your view. I think there is no right or wrong in trading as long as it works for you. Yeah.
Now, by
okay.
all means, if knowing a little bit of the fundamental gives you extra confidence to trade that stocks, then of course that is a great thing. Okay, of course that's a great thing. Do I care really go into the nitty gritty? The answer is no. But when let's say I give you an example, when I trade US stocks, I'm more leaning towards company that we are familiar with at least. Okay, so that is the at least that is to me lah. I try to trade stocks that I'm familiar with if I'm trading a US market.
Okay, thank you. Next question is by Casey. So this question, he is asking, which stocks would you recommend to buy at if the S&P indexes crash? Like, is there any
Can I
stock
even answer this?
like, is there any stocks on your watch list lah? I suppose lah.
Okay.
On your watch list. Yeah.
Okay. Since this person Casey, okay, is asking this, I assume that this is standing from an investment perspective, because traders generally don't buy when things are dropping. Okay, I don't know. Okay, because traders generally don't buy things when they are dropping. So I assume you try to bottom fish. Okay, so I don't bottom fish stocks, but I just share with you, I have a separate portfolio that I do investment. Okay, so what I do is for a given percentage drop of the market, I will collect great ETFs that I hold for many years. Okay, like for example, when COVID that time has a first outbreak, then I buy into high quality ETFs in the US, namely the SPY and QQQ. But these are for investment, and you don't expect to make a fortune from doing this if your holding period is just like 1, 2, 3 years. Okay, yeah. So personally, I only buy ETFs for investment purposes when it is dropped. I don't speculate individual companies.
Okay.
Yeah, that
okay.
is the general thing that I can advocate a little bit.
Okay, so I think
but
basically,
for trading is a no-no.
Yeah,
for trading is a no-no.
Yeah, I think just to add on a bit to Casey is that if you have been following Jeen Hao for quite a while, I think he is kind of like the trend following. So trend following, basically they don't bottom fish. So if you ask them, and if you see his answer just now, he don't quite look into fundamental that much. So he only buy when the stocks turn into uptrend. Yeah, so I think it's hard for him to answer this question, which stocks to buy if the S&P indexes crash. Okay.
Yeah,
so
it's a tough call.
Yeah. Okay, we will just take one last question since it's almost 9 o'clock. Okay. Just one last question is that in stock market, how to set stop loss? Because bigger stop loss if the price drop exponentially. How do you set your stop loss? Is by Sung Hui Wong.
Okay, can Phillip platform can set stop loss, right?
Phillip, if you are trading the CFD market, yes, our platform can set the stop loss.
Yeah. So basically,
I think this. You can answer.
Basically, you can ask your dealer representative about this question. Okay, so meaning that, for example, you buy one stock, okay, you have a predetermined stop loss already. So you just set that level. If you don't know how to set, ask your dealer representative. Okay, there is only one situation whereby you will lose more than what you predetermined, and that would be if the stock gap down. Okay, if the stock gap down. Yeah. Otherwise, everything is good to go.
Yeah, I think just to add on a bit for this one, certain brokers, the platform they use, there is no stop loss function. Certain brokers, the platform they use, there is stop loss function. So if you want that stop loss function, you just got to choose the broker offer this order type, stop loss order type. Okay, so you just need to find a broker that have this function and open an account with them. Yeah, I think that should solve your problems. Like for those people that are trading the CFD, actually our CFD platform, our CFD trader do have that stop loss function that traders can preset their stop loss to avoid that bigger losses by doing it manually. Okay, I think that is all for tonight's Q&A and the presentation. And once again, just want to say thank you to Jeen Hao for the sharing. And yeah, I think that is all for tonight. And thank you all for joining us tonight. Thank you.
Yeah, thank you everyone. May
Thank
the
you.
market be
Bye-bye.
with us.
Yeah,
Bye-bye.
okay. Bye-bye. Bye-bye.